Everyone, welcome to today's webinar. Today we are going to be talking all about the financial services industry and the impact from the coronavirus. So let's jump straight in. Today we're going to do a very brief intro and then an industry impact analysis where I'll go through kind of my research on the topic. Social Scan, we'll actually jump into Social Studio and show you what social media is saying about the financial services industry, which is very interesting. Then we'll go through the key challenges, and I've listed out my top 5 for the financial services industry. What would be a tactical response, and also how would you thrive? And then we've got an opportunity at the end for any questions. So please do throw questions into the questions box, and I'll answer them throughout as well. Great. So for those that don't know me, my name is Robin Leonard. I'm the CEO and co-founder of AF Digital. I'm going on my own learning path with Salesforce Certs. My background prior to starting the business, I was a business analyst. I worked with IBM and then prior to that, Vodafone for quite a while. And really BA is the kind of, for me, it's the coolest job in the world. I really love it. And I still use those skills today. I'm interested in the future, very interested in the future, business transformation and skateboarding, but not so much in practice these days. If you want to reach out to me, Robin_AFD on Twitter or Instagram. So AF Digital as a business, we're a Salesforce Gold consulting partner. So that's an SI. We're also a registered .org partner. So that's the nonprofit and education space. We are multi-cloud as a partner, so we're sales, service, marketing, community cloud. We also have a few other bits and pieces. We've got a lot of ISV partners, etc. So our value prop is really advisory services, making sure you're on the right track, transformation projects, making sure that you can get value from your licenses quickly. And then we've got a managed service program called Team X, which is a hybrid between marketing and technology services. AF Digital are also on the Salesforce Partner Advisory Board for Marketing Cloud. We sit on the board with 11 other partners from around the world. We meet once a year in the US, and we share it with Accenture, Deloitte, Publicis, those kind of really large organizations. So that's a real honor to sit on that board. And we've got a wide variety of industry experience. I would say we're quite multi-industry. We've done a fair amount of work in the financial services space. So this is something we can talk quite a bit about. Great, so let's go into the industry and understand what is going on, what's happening at the moment, guys. So financial services, this was one of the hardest things I had to figure out is what defines financial services, and depending on who you ask, you get a different answer. But what I kind of group them into is these basic headings: banking, investment services, insurance, lending, tax, and accounting. And there are some examples where there's crossover, like there's investment banking and there's commercial banking. And so I was a little bit generalist just because I needed to get somewhere. So that's how I determine, and that's kind of what I focused this study on. So what we know so far is that half the world's money is gone. All sorts of economic problems happening around the world, mortgage defaults, they're piling up. They're saying that 50% of the global GDP, not including China, has been lost. So pretty big hit to our wallets. What we already had was kind of talk and rumblings around a recession heading into 2020 anyway. This was pre-Covid-19. So we kind of were in a bit of a global shaky situation, and then boom. There's also been an unprecedented rise in unemployment, which has just never been seen before. So it's very hard to relate it to any previous thing because it's just so extreme. On the top left, we've got this Goldman Sachs projection. I think we're well beyond this now in terms of unemployment, but you can see for the last 50 or so years, it hasn't even been close to this. In terms of where the sectors are that are impacted, leisure and hospitality, obviously at the top, healthcare, social assistance, professional and business services. So financial services as an industry for job loss, maybe not so much. But in terms of the impact of the consumers on the industry, that's really where the problem is. US jobless claims at a record high, and it's just, yeah, it's getting ridiculous. Worse than the GFC. So if we look at the GFC, so the worst week, and this is rate of change week on week of the FTSE. So comparing this to the 2009 financial crisis, 2008, this is the worst week, 2020, week by week. So that's the rate of change. So it's statistically worse already, and it's just yet to be seen how much worse it'll get. Capital markets, everything's kind of changed. And this is probably one of the big takeaways from this call, is that everything has changed overnight. And what used to be a very large and valuable company is no longer in the same position because it's had its legs taken away. So that's the thing is, and you've got these senators, naughty senators that are, I mean, is it naughty? I don't even know, to be honest. I'm probably not able to advise, but it's kind of like insider trading. If you were to look for a similarity in a different landscape where a corporate decision maker has access to information, purchases, or blah blah blah. So this kind of stuff is really yeah, dramatic. But yeah, I mean, it's just because everything's dropping. So I mean, there's always optimism, of an upswing, but it's about whether it's going to be a U shape or a V shape. Most countries have restricted their travel, and this is the thing, is that any opening up of markets, so there'll be domestic reopening and then there'll be global reopening, and each country will take a while before it comes back on board. So this is really what's halted the whole world, and a never been seen before shutdown. Global production has halted, and if you think about China as the factory of the world, they've also stopped their production. And so as a result, the supply chain has been downstream impacted by that in ways that we're still yet to see. You can see here, China is the world's top trader, 13% of global exports. So really astounding numbers. It's very, you see a lot of news and a lot of different talk, but when you look at it from a macro perspective, you're like, oh, there's a bit of a problem here. IMF is stepping in to support countries that need money, which is probably necessary. Yeah, whether or not it's a good thing, I mean, it is what it is, I guess. And IMF are urging countries to open trade as well. So this is quite interesting. This is a recent development. But you've got countries that are also failing as well. And large organizations are really going to change. The whole landscape is going to shift. You've got here on the left, Moody is reevaluating firms' credit rating worthiness. So that is going to change a large, stable organization overnight to a very unstable, large company. So it can be very problematic when your credit rating gets changed overnight. And there's also government-imposed changes in official interest rates. So this will probably happen all over the world as governments try to curb inflation. They will try and meddle, I don't know if it's the best word to use, but they'll meddle with the economy in terms of OCR and those kind of things, because they have those levers for anyone that's done economics in university. I didn't. I did a few papers, but not enough to really get what's going on here, because this is dramatic. So that's a consideration, is that these large organizations, they may have had thin margins before. Now these governments all around the world will be meddling in the just things like the OCR, and that will change the way they're able to run their business. There's also changes to how people need to interact with your services. So contactless payments. So they recently in the UK increased the limit so that you could pay for more stuff, because they don't want people tapping the thumb pad thing. Yeah, so contactless payments, it's a responsibility. No cash is a responsibility that you actually have to your customers now. If you have to take cash, you are spreading the disease. So that's the thing, is that financial services game, the whole payments game, is going to be totally changed, because now it's a responsibility to be healthy that drives the change of payment method. It's not about convenience anymore. So it's very interesting. And generally, banking, though, if you think about how this is going to have to change, if I can't go into a bank physically and sign documents, or cite things, or them cite me, all of those things that we do in banks face to face, we have a very personal relationship with our bank manager, and that makes us feel good about our mortgage. But what if we didn't have that personal relationship? What does that change us as an industry? What about older people? How are we going to support them going through this change? They are some of the worst hit, but they're also going to be the hardest to adopt some of this new technology. So I think we were going down this direction anyway with banking, and neobanks were really forcing the hand of the older banking organizations. I think now is going to be a test of who can actually deliver the goods. Investment services. So this is really, there's just a lot of up and down around investment, right? There's a lot of opinions. It's natural that there is a continued decline, and people are talking about a depression, which could lead to much worse things. You've got millions of people that are out of jobs, that even if the economy gets back on track, not all of them are going to come back to the workforce. So there is it's not looking pretty for investors. And you've also got these pressures like Trump, who, Trump is obviously thinking about the economy and he wants to reopen. But it's just, like the whole stock market could be damaged beyond repair from this whole thing. Maybe that's a pessimistic view. The stock exchange is, in terms of its operations, it actually can operate without people. So you can kind of, that hasn't forced it to close. Although I know the Philippines, they have actually closed their stock exchange, I think just a few days ago. So actually stopped it because of the global trade. They don't want local stock to be, I guess, traded incorrectly or at a really low price. So I'm not sure. I'm not sure, but they've stopped it completely. So you can't trade, to protect those organizations, which is, it's very interesting, or to protect the investors potentially. With humans as well, in terms of their advice around where to invest, I think, if you ask any investor now, they'll have a very mixed idea about what to do with your investment. And this is the kind of advice: we can't predict the exact spread of an epidemic or what the economic effects would be. Past outbreaks have affected the markets, but they have recovered. It's tough to predict when to get out of and back in the market, so it's best to hang tight. So that's the thing, is that investors with large share portfolios, they're kind of like, oh shit, we can't really move now. It's very hard. They're less agile. They're more likely to be a little bit conservative, potentially. So that's the thing, is these human investors are a little bit constrained because there's just so many moving parts. It's hard to know what to do. And that's a challenge for these fund managers. I think in terms of what is a good investment, you can start to pick out some really interesting plays, like work from home stocks, Zoom, Atlassian, Microsoft, DocuSign, social distancing, Netflix, etc. Healthcare and biotech stocks. All of these things should see a rise. But you've got other aspects where people are divesting or selling out of their previous long-term safe investments, like MasterCard and Visa. This investor is pulling out of those stocks because he just doesn't see the future in them. So that's really the big change, is that if you're in one of these growth industries, great. If you're not, it can be troubled times. Um, and for investors, it's also very hard to know what to do with those organizations. I think one little horizon is robo-advisors, and this is really where robo-advisors will come into their own in this time, because robo-advisors can do microtransactions. They can really pick the things that are performing and really focus on those specific investments rather than having a broad brush approach to your investment portfolio. And that's the thing, is I think that all organizations will see robo-advisors being a necessary asset or tool. And generally investment in technology as well. I think financial tech is the future of financial services. FinTech, we actually did a webinar on last week, focused just on that industry, but literally it's just the kind of future of where financial services are. Every financial service has a FinTech future. And this is really where, as organizations, we need to start to get on the front foot again. And you can see here on the right, Chinese banks, with bad spelling, took proactive digital measures against COVID-19. So they did things like no contact banking, live streaming their marketing, which is quite a new thing for their wealth management team to do online shows. They also built a smart community platform, so their customers could log in. That's the kind of thing, is like, it's now time for traditional financial services firms to think like a fintech, and to go online. We've all been talking about doing it for a long time. So let's shift across to insurance. And you've got insurance. Insurance is very up and down as well. Like, it's very turbulent. It's hard to say if everyone will be benefited. You've got situations like auto insurance companies that are starting to refund car insurance, because there's no point. If you're not driving your car, then why would I need to pay that premium? And there's a lot of downstream impacts to refunding that insurance money. You've also got other cases where people are losing their health insurance because they've lost their jobs. They've now got to go seek private health insurance, and the cost of health insurance is increasing. So this is a really big situation, as the whole population practically losing access to these services. You've got it's very up and down about whether you're actually covered by COVID-19. There's a very high cost in getting ventilated in a hospital. So that's the thing, is these insurance companies, depending on who you ask or what was in their policy from SARS, if they learnt from SARS, then they may have adapted in a way that doesn't protect us now. And it's very case by case. And you've got downstream impacts like the agents that are referring and selling these deals that don't get their commission payments from ongoing premium payments. So those people are also out of pocket as well by this insurance thing not working out. And they're starting to get big claims, and there's starting to be more and more reports around large insurance claims, and situations where you've got private hospitals overcharging for the insurance claims. Because naturally, I think the tendency with insurance, and don't tell my insurance company this, but I think the natural tendency with people is to claim the full amount. Like, you don't give them a break too and be like, oh, it's all right, we won't charge you for the full thing. You're going to add everything up and be like, I want my full amount. And there's, I think, a human tendency to maybe ask for a little bit more, which is technically insurance fraud, so you shouldn't do that. But that's the case here, is that it's not like insurance companies are getting a discount on those medical fees. They're paying top dollar for all of those medical fees, and it's hundreds of thousands of dollars per patient. Wimbledon, they got £100 million from insurance. So all of these large events that were insured against things like this happening, they're all getting paid out. And there's also a lot of business payments being released as well. So if you ask the experts, Laura J. Hay from KPMG, she had a really great assessment on the on the situation, and she said that reinsurers, business insurers, and life insurance are most at risk in terms of exposure to the market. So it's yeah, it's actually quite dramatic potentially what the exposure is. Mortgages are not fun at the moment for anyone. So you've got, it's just, yeah, it's crazy. The numbers of people that are asking to not pay their mortgage. It's also very hard to get a mortgage now. So you had these people that were about to buy homes that can't really buy homes now. So it's kind of leaving everyone in limbo. And you had these old processes as well to process a loan, which can't easily be put online by some organizations. People have lost their jobs. Next, they may lose their homes. So if we think ahead a bit further than just now, so yes, it's great that everyone gets potentially gets mortgage relief. They don't get to defer their mortgage for 6 months. In many countries, that's what's happening with the banks. They're like, yeah, sure, don't worry about it. But then what happens after 6 months? Then they get a big lump sum fee that no one can afford. They're way more mortgaged, or they've got a much worse ratio than they had before. So it's going to leave people in a very bad financial situation. They haven't been working for a long time, so they've been incurring new debt probably as well. So there's just so many situations where it just is going to fold on itself. 3 million Americans are not paying their mortgage right now. It's insane. So, and then, okay, then next up, oh shit, my tax returns. So it's now tax time in the US and around the world. I don't know every country's tax season, but I know Australia is also coming into theirs as well. And unless we can do online tax processing, we can't pay our tax, or we can't get tax refunds, or all of that normal stuff. So what's going to happen, guys? In the US, the IRS, they've got the mail in trailers because they've got everyone sending in their tax returns manually through the mail, and their employees are working at home. So it's sitting in trailers unprocessed. What if there's a fire? I guess I don't know what would happen then. So yeah, so it's pretty hectic. I think a lot of countries are extending the tax filing due dates, so that will just push that out. So whatever impact that has is pretty dramatic. And not to mention, so now that we are forced to do stuff online, cybercrime is on the rise as well. And I think this is something that we just all can see, because you've got, say, financial services. If you are a bank and you have to force your staff to work from home, but they don't have the minimum criteria to meet your information security policy. Like, what will you do if they can't meet that, but they form an essential part of your program? Do you put the customer data at risk, or do you stop the customer process? So that's really the challenge, I think, that financial companies have to make, because there's such a massive risk of data breach, and now is the time to strike if I'm a hacker. So if you look at this, this is 2017, $2.51 million is the average data breach cost to a company. So, and this is in Australia, according to an IBM study. So 2.51 million. And then you look at the reason behind each different type of cost. So if there's a different cause, it's actually got a different cost. So human errors 121, system glitch 130, malicious or criminal 154. So there's a much higher price per record lost if you get attacked, which means that if I haven't protected my gates, then I shouldn't gain the trust of my customers. Why would you trust me to give me your data if you can't protect it? So that's why this is so high. Then if we look to the right, what's worse for the financial services industry is that it also has the highest cost by industry. So if you're in the financial services industry and you have a data breach, you're like double whammy. Like, you're in the worst position to have a data breach, because this is the most secure information to a customer. So this is another area that's really a concern. Okay, great. This is one of my favorite slides. So this is showing the ecosystem. This is a context diagram that shows the consumer and how all of the cash is flowing across the entire um, environment that they live in. This is the map. So we've got the customer in the middle. This is the consumer. Um, so we'll just go around. So she works a job, she gets a payroll, and this is a normal ecosystem pre-COVID-19. So she works a job, she gets a payroll. This is actually quite a large portion of her income. She also pays money to insurance. The insurance company has maybe a reinsurer. Um, she also works with an investment firm, and on her side hustle is her investing her side cash with this investment firm that's kind of taking care of a bit of a portfolio for her. She's also got some direct investments with other things in the stock market, maybe some Bitcoin, maybe some property bits and pieces. Who knows what she's got? She's invested. She's feeling pretty good about life. She also has an accountant to do her taxes like an adult. She also pays her tax like a good person as well. She does her bit for the government, pays her taxes. Um, and just to go back, sorry, the investment firm invests in the markets. The markets also pay tax as well. They do their job. And then the government's really here. They take the tax and they also pay back their loans. So the governments often have loans with organizations like the IMF. Um, so they will be paying this back based on the income that they earn, et cetera, et cetera. They also control inflation with the banks. So the customer works for the banks. She borrows money from them. She pays her mortgage. She's got a good relationship with them. Um, but the government deal with them and they manage inflation through their levers, their financial macroeconomic levers. So we've got the bank here. We've also got, so this customer, consumer, this human, again, she owns a house like many of us do. She is a homeowner, but it's an investment property. And it's actually half owned by the bank. Well, more than half, like most of us. It's mostly owned by the bank. But it's our little slice of heaven that we have a tenant living in. Tenant in this case is a backpacker. She's a bit more than a backpacker, actually. She's studying here. She's paying a rent. She's gonna stay for about a year or so, probably. But she's been paying a rent. She's such a nice person living in this house that the bank owns. But this customer, consumer, at the end of the day, feels like she owns it. And this is her, hopefully over time, she's going to pay that off. And that will be her full ownership without the bank, and that becomes her nest egg. So going around, we've also got their consumer spending. We've got retailers that they spend money at. So she also likes the finer life, the finer things, as does her tenant as well, who is kind of a consumer in society. And then these retailers have a supply chain. There's also online payments as well, which is kind of another part of financial services. So that's the full picture about what's going on in her world. And there's probably a bunch of other things. I could go for days describing this. Let's look at what it looks like with COVID-19. Dum, dum, dum. Okay, so we can see some red here, and there's a bit of complexity and there's some new things going on. But let's try. All right, so what we have got, what's changed? Her major change is her job. Let's start from the job. So her job, she's gone down to her minimum working hours, maybe 2 days a week from 5. So while she's still getting money, it's maybe not what she'd hope. So she's not looking too happy. One good plus point is that for some reason she's had an insurance claim. So she's had a payout from insurance, and because maybe she's gotten sick or she's, for whatever reason, she's had some little money. So that's good. The insurance company have come to the table, but this is their worst time ever, is having to pay actual insurance claims. Like ideally they shouldn't be paying them, they should just be receiving the premium. So they're like, oh, that hurt. Okay, you get some money. I forgot to mention the government is also bailing out her employer. So that's just helping her keep that minimum amount in. It's helping them keep in work. So they're kind of like, okay, we're just going to stay. But she's getting less money in her salary that's for sure. So then we've got the investment firms. Sorry guys, I've just got to sell what I can. I can't really afford to keep investing. I may keep some stocks if I think they're okay, but yeah, not happy days. Sell up, or stay. And you've got these capital markets that are kind of failing as well. All of the companies. So Virgin Australia just went down. They just went to receivership yesterday. So that's what's happening. And they're like, we need government bailouts, or we need loans from foreign governments or foreign investors. So someone's got to save those airlines, or they have to shut, and more people go out of business, out of work. So that's the thing, is there's the relationship now. We've got other entities coming in saying, okay, we can help out here. And for example, you've got, say, a Chinese airline that is looking or willing to buy Virgin, but you've also got the government that is restricting foreign investment. So they have to approve all foreign investment in Australia. So that's a very interesting scenario. But at the end of the day, she's like, well, my Virgin shares aren't really worth much right now. So not super happy. She's got an accountant. The accountant's not really getting paid either, because she's like, I'm just in pain at the moment. She's also not paying her tax, or trying not to pay her tax, or not able to pay her tax, or she hasn't been able to do her tax returns because she can't interact with her tax system. And this may be also related to the accountant that usually helps her with the tax returns. Can she work with her accountant remotely, and do her tax returns with the government remotely? So this all becomes a bit difficult, but regardless, she doesn't want to pay her tax, because that's like, I don't need to give you money right now. I need to get help, is what she's saying, which is exactly what the government is starting to do. So they're starting to offer income support, and this is government by government. If you ask New Zealand, I spoke to one of my friends who drives in Uber, and he got $7,000 into his account just the other day. Like, without many questions being asked, they're getting income support. So that kind of thing is happening. But you've got this like lack of tax coming in. If we look over to the bottom right corner, let's not miss these guys. IMF are also offering some support, right? So they're also offering to help these governments out with massive amounts of money. And where the IMF or other large organizations like that are not doing it, you've also got foreign governments that are also offering loans as well. So this is really where governments are needing to enter into these new contracts, new agreements, and it's really risky territory. But I'm not here to talk about that. So these guys are here, income support. They're also doing inflation control. They're actively managing that front. We've also got this consumer, as she goes around to her bank relationship starts to become very fragile, because she's not able to pay her mortgage. So that's really the problem there. We've also got a likely foreclosure on her house. So suddenly her house comes out from her kind of ability to earn money off it, and now it becomes the bank's ownership. And she stops receiving rent. So this is one of her key income sources, was her rent to pay that mortgage. I forgot to mention the tenant. She works in a cafe, and that's how she pays the rent. And now she can't work in the cafe. So she's also from France, and she doesn't have much support. So that's a really, it's all just folding on itself. But at the end of the day, the bank is going to take back what's theirs. And she's going to be in a world of hurt unless she can survive with this income support. Hopefully, if she can keep a payroll coming in, she'll be okay. And you've got the retailers on the side. No one's spending money. People are, but it's limited. So this is a pretty horrible picture, isn't it? So let's move on. But that's the context. That's the wider view. If we look at all of those different parties in financial services playing together, that's really where the cash is going. Now let's jump into a social scan, and we're just going to show very quickly what the world is saying about financial services on social media. Great. So this is actually quite amazing. This is showing what, since February 1st, what people are saying about coronavirus as a total. There's over 860 million mentions, and you can see here, these keywords are the top 50 keywords that people are saying over the last, it's been 9 weeks. So that's very interesting. And this is the overall curve. And so we can see here, it's around March 13th that we get the overall peak for the coronavirus in terms of people talking about it. This is at about 26 million in one day. This is people that have posted on social media, they've written a blog, they've created a YouTube video, they've commented on a video. It's very amazing. But that's what the world is saying about COVID-19. Let's talk about what the world is saying about financial services and COVID-19. So just to give you, maybe to step back, I'll just show you how this has been set up in the back end. So this is how we set up the keyword groups and the social listening. So I think this is the correct one. Oh, no, this is it. So basically what we're doing is we're listening in for all of these different keyword groups related to finance or financial services. I've also got FinTech as well in here. So we're really looking for everything: accountant, blockchain, commercial banking, contactless payment, digital lending, FinTech, Forex, everything. And each of these becomes a metric. So if I look at mortgage as one of those keyword groups, I am listening for apartment loans, foreclosure, home loan, house loan. And then Corona and COVID-19, excluding beer, because I don't want to pick up people drinking. So that's how we set up the listening. And then this allows us to really look at each of these keyword groups. So if I look here are the top keyword groups. Let me just add in some of these other small ones. As you can see, I've got quite a lot of analysis going here, but you can see here 21%. Is it 21? Let me zoom in. The largest portion is actually going to lending. So lending is the top topic within financial services. And if we wanted, we could sort by influencer and see what people are saying. So lending is the top most talked about topic with financial services and COVID-19. So that's like loan, lending, debt, mortgage, etc. Tax is the next biggest topic. So clearly everyone around the world is really worried about the upcoming tax season. Commercial banking is another one. And yeah, again, this also relates to mortgages as well, but it's also about your bank deposits, accounts, things like that. Insurance is next up. Then stock market, investment banking, 8.8%, blockchain, so like cryptocurrency, mortgages. So mortgage is kind of a subset of lending, and also commercial banking as well, Forex, FinTech, crowdfunding. Yeah, it's very interesting once you look at the breakdown of the different topics. And if I show you here, you can see there's quite a bit of noise here, but I might just take some of these smaller ones out. Okay, so this is last 30 days actually, and these are financial services topics. So I'm just filtering them out, and we can focus on just a few and see what we've got. Okay, so this is lending. So if we were to look at lending and tax, this is what it would look like. I might just zoom in on these guys. All right, so orange is tax. And so it's interesting to see if there's there's like a trend, like a certain day of the week, or we can just zoom in on any spike and get a better idea about what's going on with this spike. Um, and then filter by influencer score. So actually, I might look at a more recent one. What's the latest? This is Tuesday, April 21st. What was the spike? We've definitely had a little spike in the last day or so. Great. The Internal Revenue Service has had to move a lot of unopened mail into trailers. Okay, so this is what we talked about before. Tax exemption. What to know about filing payment of individual retirement accounts as taxpayers face coronavirus pandemic. There's a lot of talk about tax returns. Includes tax benefit for millionaires that will cost taxpayers 90 million. It's so interesting seeing these stories around like millionaires getting really good money out of this stuff, and it's like, oh, so a lot of that chunk of the tax surplus, or sorry, the government surplus is actually just really going as a small amount of money to rich people. Very interesting. That's not really on topic, Robin. But it's so interesting what you find here. So let's have a look and see what else we can see with some of the other topics. So let's add green in here. This is commercial banking. So similar to tax. So commercial banking and lending, there's a bit of a relationship there. Let's have a look at mortgages, see how mortgages play. Okay, they're a lot smaller, but if we take away these and say, let's do tax and mortgages, okay, it's not really a correlation. Okay, accountants and mortgages. Okay, so yeah, it's really interesting. I mean, the thing is, you can drill into anything and kind of get a good idea about what's the conversation that's really happening. This is also drilled into global as well. So what I can do is filter this by the country, by Australia, and then you get an even more macro view around, micro view around what's going on. So let me just do a quick filter while I'm here. And let's filter by regions. We'll just say Australia. Okay. Great. And let's see what Australia's saying. I might also just change the date range as well once we've had a quick look. So there's a slight downward trend you can see over time. 76,000 in Australia only. Many on Twitter as well, FYI. If you're not on Twitter as a financial services business, you really should be. Okay, so this is our keyword group trend. So I'm going to zoom in. And this is looking at Australia. So again, those topics, and we can see some dominate. So the orange is tax. That's a big concern. Lending, investment banking, and then banking, commercial banking. So I guess if you were a marketer, what you would be looking for is what are the topics that your customers need help with, and using those. So tax obviously is a problem. If you're a tax related business or any financial advisory business, you should be advising your customers on what should they do to manage their tax effectively now. That would be a really a good no-brainer. Also looking at these other issues, like what about mortgages? What about my customers that have mortgages? They need help. Whatever help you can give them, I'm pretty sure they'll be happy with anything you can give them. So that's kind of how I'd also look at this data as well. As these are what concern people. You know, these are the most concerning things. Let's just have a quick squiz at 1 day ago. So this is 48 hours of social listening data. And you can see here there's a spike at 9 a.m. That's the most popular time to talk about it. And again, this is 9 a.m. again as well today. So there's a little spike and then it should go down for the day. You see little kind of peaks at 5 p.m. and then again at 10 p.m. People kind of do one last tweet before bed. If we look at what's trending at the moment, oh, tax is up there. I mean, it's not super dissimilar from the month view, but this is also a very recent spike in tax. So let's just have a quick look and see what's happened. And this is literally 10 a.m. This is an hour ago. There's been a bit of a spike. Treasurer Josh Frydenberg is putting company tax cuts back on the agenda. Follow our coronavirus news blog. Defending tax cuts for businesses. Okay, interesting. Tax cuts for business. Okay, so there's a big thing around tax cuts for businesses in Australia. Good news. Good news for me, not so much the government. They need my tax money. Lending as well. Let's see what the recent spike is. And this is 10 a.m. spike. So that's quite interesting. There's also a little spike down below in investment banking. So 10 a.m. Okay. COVID has revealed how quickly our financial situations can change. Banks have made a good start by committing to some debt repayment relief, but these measures can't go far enough. Call on Australia's banks to implement these 5 urgent measures. What are they? Okay, banks out there, here you go. Allow people in hardship to pause debt repayments for 6 months. Cap credit card interest rates at 10%. Waive long-term credit card debt. Pay Royal Commission remediation as soon as possible. Recommit to supporting the Royal Commission reforms. Interesting. I think that's, I'm not sure if that's necessarily what they're all doing, but that's the ask. We do not have to worry about paying off coronavirus debt for generations. Okay. The Guardian. Let's see what this is. So the good thing is it's really great for research. You can kind of drill in and see what's going on. Good old center link in the image. We do not have to worry about paying off the coronavirus debt for generations. Introducing austerity measures to pay off public debt as soon as possible would be folly. Instead, we can reset our society and create sustainable economic growth. Interesting, very interesting. So, I mean, this is all live and unscripted. I'm looking at this for the first time as well. Yeah, I don't know how that works. Just not paying it off for generations sounds too good to be true. So let's jump back into the presentation. Okay, great. So key challenges facing the financial services industry. So these are the top 5 that I've pulled out of my research this is my opinion. Global depression, number 1, that we are just going to be impacted by people being out of work. Consumer debt, number 2. So this is really that growing amount of debt, and it will keep growing until people can get back into a healthy cash cycle. 3, survival of the fittest. So this is it's really regardless of how big you were or how reliable or solid or credit worthy you were before. Now it's all about survival of the fittest. So it's really time to put the metal to the test, or whatever the saying is. For any organization, it's really about if you can survive this, but you have to change. Innovation competition, number 4. So we've obviously there's a lot of neobanks out there. There's a lot of FinTech, InsurTech, all of those tech companies that are lean and young and agile. They will have a leg up because they can innovate very quickly, and it will drive competition like we've never seen it before. So hopefully for the larger organizations, they will have the resources to not only weather the crisis, but to also invest in building out new channels and new systems. And then data security, as we go through this whole change, is a massive, massive risk to financial services businesses with your data security. Massive risk, and a breach can throw you out of business tomorrow. So this is what I suggest as a tactical response. And I've got a 3-pillar tactical response framework. So it's respond, adapt, and thrive. Actually, the thrive isn't so tactical, it's more strategic. So respond and adapt is what are we going to do immediately, and how are we going to adapt over the next few months to weather the storm, and then how do we thrive after it is the thinking. Great. So this is how I've kind of responded. So what I've done is applied each of those different issues to each of these framework concepts. So global depression. So in terms of how we respond, it's all about empathy, communication, reducing our own costs, seeking aid, and extending our own runway. So there's kind of those things. And I imagine people are well through their plans with that response. In terms of how to adapt, is to focus on selling relevant products. Like, don't sell something that isn't needed by consumers at the moment. And then in terms of thriving, it's really about finding new revenue streams, like brand new revenue streams that are in need. Consumer debt. So initially, again, empathy and communication. But I think the other thing is help your customers as well. Help them seek aid would be the key difference here. In terms of adapting, is being pragmatic with their repayments. So if they've got debt with you, how can you make it possible for them to repay in an easy way that's good for everyone? And then finally, modernize your debt consolidation. So find new ways of including this debt into your relationship with them. So yeah, that's my thinking on consumer debt. Survival of the fittest, I think right now runway is the most important thing, and for the entire process you've got to really measure your runway and keep it up to date. You can't just put a finger in the air and say we think it's 3 months, we think it's 6 months. It needs to be 5.4 months, and every week you need to be tracking that. That would be my advice. I think in terms of survival of the fittest in the future is to just become a fintech if you're not already. So that's to just think like your younger competitors and operate on that level. Number 4, innovation and competition. So stopping non-core investment. So this is really anything that you were doing that's doesn't really have a place in the future, you should stop doing now. What you should do is use the Pareto rule and prioritize 80-20. What's going to give you 80% of the benefit with 20% of the bang, and then iterate on that. And then finally, just make yourself self-service as the goal. Just 100% self-service. That's all. It's as easy as that. That's really how you become a fintech in whatever industry. And then data security. So right now, everyone should have a business continuity plan. You should have a data security policy, and you need to audit your tech stack. And then after the audit, invest in secure cloud technology. So there's solutions for it. And then finally, to thrive as a financial services business, you need to make it your USP. You need customers to know that you're the most secure financial services provider. That's a marketing focus, So it's not something that the IT manager is wholly responsible for. So let's talk about how to thrive. And we've got to ask ourselves, what is the new normal for our industry? And how do we need to change? What do we need to do that's different? There is a really big opportunity here with any crisis if we grab it. So we've got to jump onto it. Otherwise, we're just going to maybe fail with a sinking ship. Bain and Company did a study, and based on the GFC in 2008, 2009, they categorized companies as either winners or losers. And a loser is seen as someone that maybe survived, but didn't really do well during or after the crisis, whereas a winner was able to make a massive gain through the crisis and then have that extend beyond the crisis. So that's really the idea, is how can you become a winner versus a loser? And a lot of it's really around technology. And if you look at a typical organization, this is a CX architecture diagram. On the left, we've got the different departments. On the right, we've got the customer. These are the channels they interact with. And then in the middle, we've got the technology. and they don't typically talk to each other in many organizations. So this is really what we want to break, is this data silo view, because it's also risky as well when you have staff that need to send each other data. So that's the thing, you can't have data silos in this day and age. What there is a future of a single customer view. Salesforce is a great platform for achieving that, where you can automate all of your sales and service channels, but also your marketing channels as well. And everything shows up in the same database. So it's there's ways of doing this to really prepare yourself for a future type of organization that's not constrained by your data silos and your technology. And also just automating the experience. So this is an example of a journey where you've got a customer that maybe has dropped off, they haven't logged into your system in 30 days. So we would send them an offer automatically by email, and that offer would be personalized, so they'd be more likely to click on it. If they don't open, they get an SMS. If they still haven't accepted the offer, we may follow up. And if they have accepted it, we want to remove them from our advertising campaigns. So this way you can really manage that end-to-end omni-channel experience automatically while you sleep. Great, so this is, going back to Bain & Company, this is a great framework for how to position the strategy for your organization. So if you look in the bottom left, so the axes are vertically your strategic market position, and horizontally is your financial strength. So if I have a weak financial strength, sorry, a weak position in the market and a weak financial strength, I should just probably shut doors or try something big and maybe see what happens. If I've got good market position but low cash or low financial strength, then I really need to do a cost transformation in my business and take away anything that's not core, like really like lighten the ship so that I can keep afloat. If I've got a lot of cash on the bottom right, but not much market share or market position, then I can invest. I can acquire other companies to gain more customers. I can acquire capability. Now is the time to acquire and grow. And then if I have both good market share and good financial share, then I should be doubling down and playing offense. I should be acquiring other organizations. I should be building capability. This is really my time to shine. Yeah, so I guess going back, it's really just thinking through, what are your key challenges for your organization? And then maybe applying them to this framework. It's like, hey, what am I doing in my response, my immediate response to address these versus next 3 months versus the future? And for me, I'm always about shooting for the sky and landing in the trees. And this is really where to go, finding new revenue streams, modernizing the way you manage your customers' debt, becoming a fintech, 100% self-service, and data security as a USP. Great, so any questions from the audience? Great, no questions. Well, I hope this has been useful, everyone. This recording will be available on YouTube. So yeah, please subscribe to our YouTube channel. Otherwise, we will keep running these. We've got media industry and health industry this week, as well as every week we're running social listening webinars for Australia and Philippines. We are also doing free masterclasses on Service Cloud, Marketing Cloud, and Social Studio at the moment. Those are also being recorded and put on our YouTube. So tons of content being produced, tons of learning available. And if there's something you want that we're not doing, then please let us know, and we're really happy to create any kind of content. Thank you.